Hello and welcome to Switzer TV. I'm Peter Switzer, and today I'm going to be talking to Andrew Lockhart of Metrics Credit Partners. Welcome, Andrew.
Hi, Peter.
Now, tell us, and provide us, I guess, with a brief overview of the organisation of the MCP investment team.
Yeah, so the MCP team that we established back in 2011, it's comprised of myself and my colleagues who've got sort of deep backgrounds in corporate risk management, corporate credit. We're direct corporate lenders to some of Australia's largest corporates, and our careers have gone back in banks for many years.
Okay, so what are the investment objectives of the MCP Master Income Trust?
So the MCP Master Income Trust is designed to give investors direct exposure to Australian corporate borrowers and providing that in a diversified fund format. We're looking to provide our investors with monthly income and have that income generating a return for investors of the RBA cash rate plus 3.25% paid monthly. Okay.
And so the money you raise in the listing will become the basis upon which you lend to bigger organisations.
That's right.
The money they pay you then becomes the basis of the distribution to those who've taken up the units in the trust.
So our investors are receiving the full income, the interest and fees that are generated and charged to borrowers. That's paid directly to our investors on a monthly basis.
Okay, so give us a sense of the investment profile of the trust and the sort of sectors you'll be investing in.
Yeah, we don't favour any particular sector, but what we do look to do is provide our investors with a diversified exposure across Australian corporate borrowers. So if you think about the Australian market as a whole, there's very limited opportunities for a lot of non-bank investors to get direct exposure to Australian corporate fixed income. Most Australian corporate fixed income sits on bank balance sheets. Australia doesn't have a deep, functioning, liquid corporate bond market. A lot of the banks provide that debt capital. So what we're about is providing our investors with direct exposure to those underlying corporate loan assets.
So in a sense, you are sitting between the borrower and the potential lenders, the group of people who take up units in your trust, and you act like a bank in many ways.
In lots of ways, that's right, in providing direct exposure and direct access to those underlying loan assets.
Okay, so what is the rationale behind launching a listed investment trust?
Yeah, look, the underlying loans are not exchange traded, so they're assets that trade between banks. So what that means for most investors, it's very difficult to get access to the market, and it's very difficult once you have exposure to the asset to trade it. And so what we're trying to do is provide an environment or a vehicle that allows our investors to get access to a true, genuine, diversified fixed income pool of Australian corporates, but in a liquid format via a listed ASX vehicle.
So that means that at any time, effectively, because it's listed on the ASX, if they want to get out, they can get out.
That's right.
Yeah, which would be very appealing to many people. So what's unique about the income strategy compared to other income strategies available in the market today?
Yeah, so it's largely in the Australian market context. A lot of investors have exposure or heavy equity-weighted portfolios. They have very limited opportunity to invest in direct Australian fixed income. So in the Australian fixed income context, you can invest in government bonds, term deposits, high investment grade assets. But to have a diversified exposure across Australian corporate fixed income, it's very difficult to get that exposure. And so what we're about is providing our investors with the full returns that are associated with direct lending to those corporates.
So are you hoping then those people who would like to have more exposure to bonds, like if bonds were smaller and more accessible, and corporate bonds in particular, that they would be thinking, well, this might be an alternative where I can get my money into something that's really punting on or investing on in fixed income investments as opposed to equities.
Yeah, that's right, Peter. We think when we look at the Australian average Australian self-managed super fund or retiree portfolio, often still heavy equity weighting, limited opportunities to get invested in an asset class that provides for stability of capital and a regular income flow. Loans provide that. The assets that we invest in are all floating rate loans, So the return to the investor obviously rises or falls dependent upon movements in market interest rates. But unlike a bond, where an investor might be subject to capital losses if interest rates rise, for investors in our fund, if interest rates rise, they generate the benefit of that through higher returns.
The timing of this, has it been good luck or good management that it's been launched when interest rates seem to be on the path upwards?
Interest rates have less to do with demand for Australian corporate credit. Companies are looking to borrow, looking to expand their operations. In Australia, and in all economies, the need to provide efficient distribution of credit in an economy is what drives growth. And we think that efficient distribution of credit is really important. And so for us, the access to the market is what we deliver for our investors.
Okay, so what are the risks associated with investment in the MCP Master Income Trust?
So we think that by investing in a diversified pool of Australian corporate fixed income, we think we can lower the risk an investor's exposed to. The asset class in its own right provides for stability of capital and high returns. And often with a loan, you're not in the position of an equity holder. In an environment where investors face more volatile market conditions, equity values can rise and fall, and they're far more volatile than a exposure at a senior level in the debt of a corporate.
Andrew, is there any specific challenge that you'd like to talk and explain?
Look, Peter, an investor investing in our fund is largely, the biggest risk that they are exposed to is the risk of credit loss. That's where a company fails to make a payment or it defaults on their interest and principal repayment. For us as a team, we think the way to minimise that risk for investors is a detailed understanding of the company, to understand the risks that the company is associated with, and to have our investors invest in a diversified pool. So an investor investing in the MCP Master Income Trust, day one, their exposure will be spread across and diversified across 50 individual loan transactions. As a team, we've made over $3 billion of loan transactions, completing 80 individual loans over the period since June of 2013. So I think we're a well-experienced team in terms of how to manage that credit risk.
And because you're a listed vehicle, much like I've got a fund on the market too, if the market goes down, you are going to be vulnerable to market movements because you're listed. How do you think your fund would perform in that sort of situation?
Yeah, I think the underlying asset class is very stable, and I think the important thing that we will be providing to investors in the MCP Master Income Trust is regular monthly cash flows. So the asset class in its own right is stable. Where we sit in the borrower's capital structure is at the highest ranking, providing greater stability. Loans, as you know, and lenders have a favourable treatment in terms of Australia's legal and regulatory framework. And so from that perspective, we look at the position in providing debt as being a far safer position to be in compared with owning equity of a company.
Okay, mate. Well, good luck with that.
Thank you very much, Peter.
Thanks, Andrew. So that was Andrew Lockhart of Metrics Credit Partners. I'm Peter Switzer. Thanks for joining us.